What's up, everyone? Guy here. Again, welcome to my channel, Minority Thinker. For those that are new to my channel, please do like and subscribe to my channel. With that said and done, let's get straight to the point, guys. Take a look at some of the headlines here. This is Yahoo Finance. Most Americans feel there's a recession or one on the way, poll shows. Okay, so the majority of Americans feel that U.S. is either in a recession or headed toward one, according to recent public opinion survey compiled for Yahoo. A bit more than half of the respondents say they are more stricter with their money habits. Okay, polls of 1,512 people show 62% feel the country is already in a period of contraction. Another 19 believe the country is headed toward one. Okay, guys. So the narrative has been shifting. Guys, from the all-time high in around November at 36. Let me take a look. This one's a little better right here. Okay. Around November, and it peaked. Looks like it peaked in January of 2022. So this whole year has been on a slide. So I believe, if you look at this chart, this is every time there's a rebound, it's lower. Okay, it's dropped and it pump. Every time it pump, it's lower than the previous pump. Okay, so now we're at three pumps already, and this seems to be going down. Okay, so the sentiment has been shifting. Okay, from this point on here, from hysteria of this rally is not gonna end, it's gonna go up, from changing from that narrative to now we're talking about correction, talking about recessions and inflation. Okay, so let's take a look at another headline. Stocks fall sharply. Dow drops more than 600 points ahead of pivotal inflation data. So the data is going to come out tomorrow here, guys. It's not going to look good. But it's 6 points ahead, so it's already corrected for tomorrow. So it may be just trading sideways. It may go a little lower, or it might go a little bit up. But it's already accounted for. So this is 5 days here. It dropped here. Let's take a look at the world news here. This is World Bank slashes global growth forecast to 2.9%, warns of 1970 stagflation. So you got from narrative from this boom is gonna keep going until it never ends, with from moving that until correction, until recession talked, and now it's talking about stagflation. Because of the inflation. Okay, let's take a look at this right here. This is the graph from the Fed here. .5% consumer index. So it's almost, for the past 70 plus years, every time it's over 6%, it's guaranteed 100%. Recession. Okay, some of the recessions even below that, like in years 2000, inflation is less than under 5%. It's still a recession. Okay, there's a couple of recessions that's under 6%. Okay, so that to tell you something. Okay, let's take a look at this clip here. Warning.
Seem to be, but June 1 starts the pairing of the Fed balance sheet. So at first it's going to be 17.5 billion, 30 billion. Then it's going to double in 3 months. That's going to tighten credit. It's going to tighten monetary conditions, and that's going to lead to increased volatility. So I think now that we have May over, now that we're into this, going to a Fed meeting on June 14th and 15th, I believe it is, that we're going to see increased volatility. So I'm back to where I was in terms of my positions, slightly high.
Hear that, guys? So the Fed is not going to buy any more debt from, you know, private or government or whatever company. So with all this volatilities, the price from all-time high drop close to 12%, but it was 17%, but then it rebounded, now 12%. Now all this is not accounted for. Obviously, this consumer price index inflation is going to come out tomorrow. This might already price in. It might go down to about here. It might drop, or it might already price in. But it didn't even account for this. I believe the 14th, June 14th, 5 days from now, is that they're gonna quantitative tightening.
Dimon said, on that way today. Here's what Jamie Dimon said. I said there's storm clouds. That's what he said last week. I said there's storm clouds, but I'm going to change it. It's a hurricane. You better brace yourself. JP Morgan is bracing ourselves, excuse me, and we're going to be very conservative with our balance sheet. That doesn't sound like a guy who's overly bullish about the environment, Liz.
So that was Jamie Dimon, one of the more insider, head of basically the bank. Very powerful. Came out with a statement saying that it's going to be a hurricane because this smooth or this soft landing might not happen. Okay, I mean, so he basically came out and gave some warning. The reason behind that, I don't know. Sometimes these, some of these talking heads, you don't not want to hear what they have to say. Sometimes they have some types of agenda behind that, but he said it, so that means there's some types of warning to the feds, warning to the market, that the market better not, in my opinion, the market better not if the market continue to be trading sideways on this, then interest rate, it's going to be aggressively pushed forward. Basically, the warning, I believe, is Jamie Dimon. Basically, he's a talking point for the feds. The feds provide the stock market. Feds provide company with a lot of warnings right now, guys, that they basically they're basically engineering a soft landing. And what's that soft landing looks like by raising interest rate is they want to get to the pre-COVID level around 29. They're almost there. The pre-COVID high is 29, or on the basically average is 25. So they want to be in this landing here. That's pre-COVID, okay? If they're not getting into this, and inflation's tomorrow, that's still over 6%, which I think more likely, and it is, they're going to raise the rate and basically quantitative tightening, okay? So if the market didn't respond to what all the warnings by the feds, they're going to jack up the rates, decrease the quantitative tightening. They want to go on this level, and it's tricky, okay? Because if you spook the market, this is my line here that can go down to this low right here, the crash of the COVID crash of March of 20, okay? I think this is where we might end up in this zone right here, and that is 42%, 43% drop, okay? And from an all-time high, that's 50%. So it's not It's not out of the norm, in my opinion. If you spook it enough, the hysteria kicked in, the fear kicked in. You can potentially drop even lower than this level. Okay, so that's my take, guys. And I'm always an optimistic, as an opportunist, entrepreneur, free thinker, minority thinker. I'm always optimistic, but at this juncture, you got to understand to be a realistic. Okay, a realistic, not optimistic. You got to be realistic that the market has a potential for it to crash. If it's not sudden, it will smoothly sailing down. Okay. If this hovering like this, sideways, and interest rate still high, they're going to engineer a crash down to this level and below that level because of the it's human nature. It's the hysteria. It's the fear. Okay. So how do you do to protect yourself? I mentioned this from previous video here. One of the things that you should be doing right now is hoarding cash, guys. Cash will be king. Cash beginning to look a lot like king right now, okay? But let's take a look at where smart money, because that's where smart money is at, okay? Take a look at what they already prepped. And some of these headlines that previously, history, this is August of beginning of the 2021. I mean, companies are prepared for this already a year in advance. So just let you know, I just want to pull this back because this didn't make headlines and people are scratching their head. Why are they hoarding cash when the money is so cheap? And they're telling, and this is the time where they're telling folks that cash is trash, is that they can leverage it and it's cheap money. Why are they hoarding cheap money? Well, they're preparing for today. They're preparing a year in advance, guys. So this is where smart money. So companies are hoarding cash as Delta variant takes over the globe. I think Delta variant, these are just noise, but they do it in the background just to say that, because of this COVID variant or something like that, they're hoarding cash. It has nothing to do with it. They're preparing for this because they're engineering a they quote unquote they call it soft landing, but it's actually engineering a market crash. Okay. Apple, Google, and other big companies around the world are continuing to add their massive piles of cash, a sign that corporations are increasingly nervous about how highly contagious. Yeah, this is. So let's take a look down here. Tech giants in particular are hoarding cash. Apple, Microsoft, Google have a combined 460 billion in cash in their balance sheets. Amazon nearly has 90 billion. Facebook has more than 64 billion too. And obviously, I did a video on Warren. He had about 144 billion in cash. Okay. So what I'm saying is that for those that came out and said cash is trash, don't listen to them. They're what they do, and they built cash position on the background. So if you see these people that said that, I don't know. If you still listen to them, like Ray Dalio, you still listen to them, you are out of your mind. They're protecting their backside and speaking on the front side. You know what I mean? So, and also take a look at some of the headlines from last year. You remember this headline? Zuckerberg, Dorsey, and 18 other billionaires lead massive stock sales. So this was sales in April, okay? Let's take a look. So this was in April, okay? So it's around here. This one they sell their stocks, okay? So even though they sell early, and this is when they sell out and retails, hysteria retail bought in to push it all the way to the all-time high, okay? So these smart money, they sell out while retail's pumping up to all-time high. And they have the patience to wait And this time around, they're talking about like taxes and stuff like that. It's been an incredible run for the U.S. stock over the past 6 months. S&P 500 has surged 28% at that time, selling new record highs every month, with investors optimistic about to return to normalcy as more can get COVID vaccine. Such exuberance helped billionaires' worldwide wealth grow as an astonishing $5 trillion since the early days of pandemic in March of 2020. But is it the beginning of an end? The E-Trade survey, 957 active investors earlier this month reviewed that 69% of respondents thought the market was in a bubble. Certainly, plenty of investors have been cashing in, including some of the nation's richest. So again, Sky, at this time around, right before massive rally high, this is where they cash. The billionaire smart money cashed out. Okay? And patiently waiting even though it went all high. Okay? So now we're at this juncture. Now they have all this cash. And guess what? It's just like Warren, waiting for the time. This is the first thing that I would say is hoarding cash. Cash up, guys, because there's going to be massive opportunity to buy on the low when it either discount. Do whatever you can. I don't know, work side job, hustles, 2 jobs, get rid of debts, because it will be becoming very expensive to servicing your debt, and cash will be you will get interest in your cash. You'll basically, and forget about the talk of inflation that a lot of these guys are telling you, that your cash will be worth less of buying power because of inflation. Well, inflation is only hit what? Specific commodities like gasoline and some items of food, okay? And it's basically, it's not going to be permanent. It's going to be temporary, okay? If you take a look at this right here, okay? This is inflation chart, okay? If you look at the 1974, look at that, 12%. It still only lasted to 74 2 years, okay? This one peaked at 14.5, 1980. Okay, 3 years, 2 years, 3 years, okay? So we are in the worst, one of the worst inflationary period, and it's only lasted 2 or 3 years. So it is a temporary thing. So don't fall for the inflation. It's gonna basically dilute your money, because if it's down here, if it's dropped down here, it's back into deflationary. Okay, so when it's deflationary, your money will buy more. Okay, I believe what they're fearing now is a stagflation. So they're gonna have a lot of people talking about stagflation here fairly soon. But I don't think stagflation will happen. If it happens, it happen only maybe a year, 12 months at most. 12 months, it'll be over. Just because supplies and technology, it's gonna catch up. They're gonna flood the U.S. with a lot of supplies. Okay, so I'm not too worried about stagflation. Basically, stagflation is a slowdown economy plus the inflation. Is that because of this right here, U.S. dollar index? It's at almost an all-time high. It was an all-time high, peaked right after the recession, the quick recession of 2020 March. Now it's at, hovering around 120 compared to other currency. So basically, and definitely we're not going to be in the hyperinflation aspect of it, okay? Because U.S. dollar is at the strongest, still the world reserve currency. It's at the strongest it's ever been. Okay, most of the folks will flocked. If you ever read up about the milkshake theory, I would suggest you look into that. So basically, what it is that U.S. dollar is as strong as ever, reserve currency. Most of the other currency are much weaker, so they're gonna flock to the U.S. dollar, and basically import. It's gonna be cheap for them, but export for us is gonna be cost more for us to export, but import for us would be much cheaper. And so when you have import of goods to the U.S. is cheaper, obviously the supply side of it, you're gonna get more supply. The demand may not be there to meet the supply. So I think that, again, that's the reason why I think the inflation, it's gonna be transient. How long? All depends. 12 to 24 months at most, and stagflation within 12 months. Just because based on the strong dollars, basically we're the strongest currency as compared to other currency. So that's my take on it. Let me know if your take on that aspect of it.
All right, guys. So that's what I would do. Just cash when stuff is on sale, stocks on sale. Then that's when you want to increase your positions. Obviously, that's just what I'm going to do. I'm not a financial advice. My video purpose is education, entertainment only. You do your own research, UIOR, and that's what I would do. If it goes down here, basically in the meantime, stocks that I'm eyeing on, I'll add it on to my watch list. Let's take a look at some of the stock that I'm eyeing on. And add to the point of cash is king. Cash will be king. These are the top company that has the most cash. Apple, 202 billion. Google, 169 billion. Microsoft, 133 billion. So these company, Amazon, 86 billion. These company will survive when the credit crunch come to play. So it's smart to put them on a watch list, not necessarily want to jump in and invest in them, but just keep an eye on. That's what I do. Keep an eye on these company, and also dividends used too as well. I mean, it has some good yields, like say Microsoft 0.8, United Health 1.2, Pfizer down here is decent, 3% yield. Coca-Cola 2.7 yields. So the company that are what's called zombie companies that are over leveraged, they're gonna die out if the credit crunch is to call on. Okay, if there's no liquidity, those companies gonna die out, and the company that can service its own debt and has a lot of cash reserve will basically not only survive but will thrive. They will buy out those companies if it looks good to add to their portfolio. So these companies, it's very good to watch when it mark on sell. That's what you should be doing, guys. Hoarding cash, work, do whatever you can, decrease your debt, deleveraging yourself, add cash on the side, do research on company stocks, or do research on your surrounding area. If you want real estate, looking for houses, pricing, where you want, then basically add them to the watch list to see if it goes down or see if it's on sale. And when it happens on sale, then that's when you make that call. Okay, prep. That's why you prep. Okay, guys, that's it. I have some link on the description below for this video, but hope you preparing, guys. I think I'm not. If you prepare yourself, don't be a doom and gloom. If you prepare yourself, you're not too worried about the doom and gloom. Okay, if you have cash on the side, if you have work, if you have a place, no debt. If you have, basically, you're not to worry. I think this is the one of the greatest wealth transfer. This is another once in a lifetime opportunities for wealth transferring too as well, guys. All right, if it happens, then you can take advantage of it. If it doesn't happen, then fine. You're sitting on a lot of cash, and then you can sleep better at night, in my opinion. Okay, so disregard a lot of noises of different things. You know. So, all right, guys, that's it. I'm out.